Choice started back in 2013, and the story is a diaspora story. So it was a group of Kenyans in the diaspora who wanted to create an investment vehicle back home. So Choice, so that's a very wide question. I have to intentionally create time for my family, for my kids.
Are you tired of the matatu routine, the running, pushing, and the waiting? Do you want to be the driver of your own journey? Come to Amica and get sorted. Get yourself a ride faster than possible. With a low transaction cost, you can get your loan processed fast and also enjoy competitive interest rates as low as 1% per month, plus a defined repayment plan. Vehicle ownership has never been this easy. We finance the acquisition of motor vehicles, boda, tuk-tuk, plant machinery, among others. Amica Savings and Credit. Plan smarter, live better.
Choice started in 2015 as a licensed entity, but the story of Choice started back in 2013, and the story is a diaspora story. So it was a group of Kenyans in the diaspora who wanted to create an investment vehicle back home, and they initially started that vehicle. It was now a private vehicle, private company. But then in 2015, they decided to apply for a license so that they could open it up to the public. So they got a microfinance bank license in Kajiado County. So the model was the conventional banking, brick and mortar. Open an account, come to the branch, open an account, apply for a loan, come and deposit, come and take a card. But fast forward is that so that model didn't really work initially, because one, it was a bit expensive to run that model, and it meant that the initial founders had to go back over and over again just to ask for funding from the shareholders, so to keep on the business running. In 2021, we got a new investor. That's when I joined myself. And we decided then to change the business from conventional banking to digital banking. So that meant that we're relooking at our core banking system, we're looking at our products, we're looking at our team, we're looking at our partners. So that's what exactly happened after 2021. So today, Choice is a fast digital bank. That means that we want to automate every process, every customer journey that is in the bank today. We want to automate it and make it easier for the customer. And the biggest driver is actually the customer needs. It's actually what does the customer want. Today's customer wants to onboard quickly. They don't want to come to the branch. They want transaction to happen faster. And that's what we've been building. So digitally onboard a customer, digitally serve a customer, ensure that the transactions are happening quickly. And we have even those customers that really don't want to leave their ecosystem because they already have their own comfort zone. I'm assuming that if you're already using a logistic app, you request a ride when you're going home. That's already your comfort zone in terms of logistics. So you really don't want to get out of that space to go and make a payment. You'll want to, as you're sitting in your ride, you probably buy airtime, you probably make a payment, you probably even borrow within the same app, get the money in the app, send the funds to your parents, and pay your bills. And that's what you also your bills. So we have a B2B2C product called Banking as a Service, where we are able to integrate those who already have ecosystems. We are able to power them up through APIs to be able to distribute banking products within the ecosystem. Yeah. So the biggest challenge normally is actually when you're 100% digital, is the biggest challenge is actually getting the trust online, because a normal Kenyan will want to actually see a branch before they transact, but we have seen that changing, right? So how do we then build a brand that is trusted online? So that's what we are still figuring out. And what has worked for us so far is that we have been able to partner with other partners that already have their own ecosystems. So if you're in logistics, if you're in e-commerce, if you're already in neo-banking, we come and empower you. So we really don't interact with the end user. We power your ecosystem so that you're able to distribute these choice services within your ecosystem, right? So that means that because already the end users trust with the partner, then we empower the partner, then we are able actually to distribute our financial solutions to the end user. We want to diversify. We want to do the same thing but diversify. So we don't plan to go back to the to conventional banking model of brick and mortar. We don't have those plans, but we have plans to actually enhance our digital solutions to be able to cater for every aspect or every product. So, for example, we want to look at how can we automate credit scoring. How can we score those guys that don't even have credit data, right? So how can you onboard you to an ecosystem? Let's assume that you have never banked, but literally you've been ordering, you have orders and you have customers, right? Can we be able to actually get that customer data? How many orders can you fulfill in a day? How many rejections or returns are you getting as a vendor, right? How frequently are you paid in a month or in a week or in a day, right? So with that kind of additional data, we can then be able to score you. So that's what we are trying to get into. We are trying to get into EV financing. We are trying to get into solar financing because we see there's a lot of traction around that space. We're getting into cross-border payments. But at the end of the day, it's just the digital model. So we're not going back to the traditional banking. It's just digital, but we're diversifying to ensure that then we cater for every aspect of a customer journey. Yes, so digital banking is banking without any human touch or human intervention. So we have different channels in digital banking. So internet banking is one of the channels. Mobile app is one of the channels. USSD is one of the channels, right? So we have all these channels that are able to remove the need of having a physical interaction in that process. That's what we call digital banking. The value is that it's actually faster, it's quicker, it's more efficient. It also even cuts costs at the end of the day, and sometimes it eliminates fraud from within that process. So that's why it is actually what we really want to invest into. So initially, yes, this wasn't even a discussion because it's a customer coming into a branch. So they have to get their ID, you verify this is Mr. Bonface, you give them the service. So it was not complicated initially. But when we changed our business model to digital, then we were aware of these risks. So number one, we have a lot of cybersecurity preparedness that we've already put in place. We have trained a lot of our staff just to ensure and to identify the risks around cybersecurity. We have two-factor authentication methods. So that means that before we actually approve a transaction, we have to validate whether this transaction has really come from the end user, the exact end user that we onboarded. So we have to send an OTP either through the SMS or through email, and sometimes we have to through the Google the authenticators that are there. We have also we do a lot of penetration tests and it's a requirement that we do it regularly to ensure that we are able to identify any risks, any issues that might be, it could be an attack, it could be phishing. Be able to capture all these risks, and once we get the recommendation from the auditors, then we are able to implement them. We've identified areas that are prone to such attacks and tried as much as possible to ensure that we eliminate those risks. Yes, probably there might have been attempts, but so far we've not had any attack on our systems. So we have MSMEs. So these are guys who are in trade, these are guys who are in retail, these are guys who are in agri-tech, these are guys who are in manufacturing. Those are the guys we are targeting. And today we are building solutions that just go around these MSMEs, be it credit, cross-border payments, forex, internet banking. We are looking at MSME as a main target market. But of course, we also onboarding other digital individuals, guys who want to use Choice as a salary account, guys who want to save in Choice. Those are guys that also we are working with. But our main focus is guys who are doing MSMEs. It's actually the biggest sector in this country. 95% of businesses in Kenya are MSMEs. Yeah, ignore the big corporates. The biggest guys, the largest number is the MSMEs. And we feel like these are the guys that are left out, even when it comes to banking products, even when it comes to customizing products for this market. And what we have done is that we are really building now products specifically with them in mind. Yeah, so we're having interaction with them. What kind of credit products do they want? You can imagine this is somebody who has actually never probably even banked before, and they want a loan. They have a business. It's a mama mboga who is selling avocados, who is selling nyanya, but she has never banked before. So how do you get the credit data? How do you score them? Right? So we are looking at then how can we go to where they are, the ecosystem. For example, how can we partner with those guys who are doing the Chama model? How can we partner with those guys who are in the circle? They might not be banking, but they already have their own informal setup that you can actually be able to digitize and be able to get the data from those kind of structures. So that's what we are looking at. We see a lot of potential there. There's also a lot of opportunities in that space, and it also goes to the bottom-up economic agenda that is being pushed by the president. Is that it's bottom up. So we want to look at what are they missing down there? What can we build for them? How can we even grow 10 of them? We're not even looking at 100. Just 10 of the MSMEs to be big corporates, right? And then how can we replicate that model in other parts of the country? Their biggest concern is actually access to credit, not even the cost. Because the businesses they are doing, the margins are enough to actually pay for the cost. It is the access of the cost. And any normal bank, any conventional bank will look at them as a risky customer. One is that you don't have credit history. If I do a search on CRB, nobody has ever submitted your data to CRB, right? You're very green. It's a green field. That's number one. So just being able to score this guy and be able to award a limit, a ticket size to this customer is the biggest challenge that we have also as an institution. So how do we get the data to be able to award them a score that then translates into a loan limit? Yeah. In terms of cost, that comes in second or third, but it's not the biggest issue. The biggest issue is actually access to this capital. Because I've seen businesses that are able to do margins of around 40%, 30%. So even if you charge them, assuming that it's a mama mboga, you give them 1,000, and buy in the evening. In the morning, give them 1,000, they go to Gikomba, buy nyanya, mboga, vitungu. By the end of the day, they come back and tell you, I've actually made 400, right? That's a 40% margin. 1,000, 40%. If you charge them even 20%, assuming you're actually doing a daily charge, that will not be an issue to them, because still they are making a 20%. So the issue is that where do they get this capital to even start their business, to even scale their business? Yeah. Who can believe in these guys who don't have credit data to give them money? We actually look at ourselves as enablers. We work with fintechs today, right? Most fintechs don't have a deposit taking license. We have a deposit taking license. Most fintechs will want to operate or must operate with a bank account. We can offer that bank account, right? Most fintechs will actually want a co-lending model where because the market is quite big. I told you it's 95% of the businesses are MSME. So that means that if they wanted to even get to 50% of this market, they really need a lot of capital to lend to these customers, right? We can provide that capital. We can co-lend, right? They have a lot of additional data that we can use to build better scoring engines, and then we co-lend with them. And what I mean by co-lending is basically that you know the customer better, you know where they stay, you know how many rides they do, you know what kind of business they do. Choice doesn't know that. Can we have a partnership where we use your additional data, we use our financial mobilization strategies, then we co-lend to the customers. So we don't really see them as competitors. Fintech of course have an advantage. They're agile, they're fast in decision making. I know fintechs who have built very, very good customer journeys. They understand exactly what the customer wants, right? The only thing they need is a bank partner, and Choice is willing to be that bank partner that then can scale that or can complete that customer journey. Yes, they need a financial licensed entity to complete the journey. Choice comes in and then completes it for them. So yeah, NPLs is a pain to every business, especially for microfinance banks. And this is the reason. Yes, we are targeting the MSMEs. So these are guys who were ignored by the conventional banking. But also these are guys that are doing small businesses, and the ticket size is quite big, small. So we have been able to manage it. One is through the additional extra data that we get to score them. It's called alternative credit scoring. So I'm not only using a CRB to score you. I'm using also data like your social media. How active are you on social media, right? How many calls do you make in a day, right? How many SMSs do you send out in a day, right? What is your location? I can tell you that data shows that there are areas that the NPL will be slightly higher than some other areas, right? So how can you use this data to then make a better decision? So probably areas that are the risk is a bit higher, can you lower the limit and then filter out and give to the only good guys and then grow them, right? So that's what we are looking at. The advantage is that it's a very, very small ticket size. So that means that if one defaults, the impact on NPL is that it's not quite big, quite huge, and that means you've spread your risk. Unlike if I was to give all my ticket size, all my money to one corporate guy, and then that corporate guy struggles and shuts down, can you imagine that impact on our book? So I think for me, it's an opportunity that we see there. It is creativity that we have to employ, a lot of innovation to use that alternative data to be able to score these customers better and give them a loan.
Are you tired of the Matatu routine? The running, pushing, and the waiting? Do you want to be the driver of your own journey? Come to Amica and get sorted. Get yourself a ride faster than possible. With a low transaction cost, you can get your loan processed fast and also enjoy competitive interest rates as low as 1% per month, plus a defined repayment plan. Vehicle ownership has never been this easy. We finance the acquisition of motor vehicles, boda, tuk-tuk, plant machinery, among others. Amica Savings and Credit. Plan smarter, live better.
I think there's an opportunity, by the way. There's an opportunity. One is that how can we score these customers better to be able to make a better decision. So, for example, I'll give you an example. And it's quite interesting that what we realized within is that a customer will default on a bigger loan and not will default on a bigger loan but repay the smaller loan. Assuming that if you had a logbook loan and you have a 5k loan from Choice, you rather pay the 5k and default on the bigger logbook loan. And this is the reason that you're actually using this as your emergency. You normally use this as your emergency, so you don't want to mess up with it. Yeah, but the bigger loan, fine, you'll mess up and then you fix when you have enough liquidity, right? So it's a matter of how do you score these customers to be able to award them the right limits, the right scores, limits that they can be able to repay without overburdening them. Yeah, I don't want to give you 10 million when I think you're only capable of paying a million, right? So how can I get you to where you can be able to comfortably pay? So that's, I think, the opportunity that I see there. Yeah. Then gradually, yes. How can I? Because I'm also observing your income. I'm looking at if you're doing a business, how many branches do you have? How many tomatoes are you selling now? What is the inflow of customers into your space? We have also done something around transactions. So how many transactions hit your account, right? And then how many transactions come out of your account? Just the number, what the value, the number. It could be 10 shillings, 100 transactions on them, or it could be one transaction of 1 million, right? The guy that has done 100 transactions has a better credit score, has a better weight when it comes to that specific parameter. Right? It means that if one of their customers stops, the guy that paid the 1 million, they're done. But if you had 100 clients and 10 of them don't come, you still have 90 guys that you're serving, right? The risk is a bit lower. Yeah. The same thing for money out. So are you using this for savings? Are you using this account for transactions? Right? If you use it as transaction, that means that it's a very important account for you. You'll not want to mess up your relationship with this bank. But if you're using it only for savings, you can move to any other account. Why not? Yeah. So there's a lot of alternative data that we're looking at to be able to score these customers. One is because of the global trend. So there's a lot of push to ensure that we move to the green finance, and there's also a lot of encouragement, even from the regulators, that is a space that should be harvested. So we see a lot of opportunities in guys like boda riders, Uber riders that can be able to get away from the fuel and get to EV. It's cheaper. It's of course it's better to our environment, and that is one thing that as a business we keep on doing and supporting every day. It's better for an environment, but also it's cheaper for the guys to do business, right? So that's what we have identified so far. There's a lot of manufacturers who have already started producing EV cars and motorbikes and solar panels for residential homes. And we are now working to get exclusive partnerships with them to ensure that then we finance those guys that want to enjoy these products. Yeah, so there's quite a big opportunity in EV and solar. We have even just scratched on the surface. And I think the future is even more guys are going to move into EV and solar. A lot of cars nowadays, even the trend, you can check, it's hybrid, and some guys have 100% turned to EV, but it's hybrid because some still want to test and see what's happening. Yeah, but we are seeing that trend and we are following the trend. As I mentioned, is that most of our innovation, most of our products are because of a drive from customers, drive because of our customer needs, and also trends that are happening within our society. The solution is almost the same. We are targeting the same customers, but how we do it is a bit different, right? So for us is that we open accounts for these customers, right? They don't, right? Because they don't have a deposit taking license, right? I hope you don't quote me that anywhere else. So we open accounts for them. So that means we are able to get more transactional data. As a border guy, I have needs. I pay my rent, I save, I pay my school fees, I send my mom some money. So that is what we are harvesting. So we are able to get more transactional data that we can then be able to get a better score, a better view of this customer, right? And then we are able to customize and even tailor make the installments. So if I realize that you probably might struggle making daily payments, just pay after 2 days. My assumption is that if you missed your target today, tomorrow you can top up and make a payment. So we can be able to have a better understanding of the customer. And we are also not really only encouraging a borrowing culture. We are also actually education and training to our customers to be able to save within these accounts. So additionally, they could borrow, yes, but they could save. They could earn interest from their savings, right? Yes. They could increase their limit by saving. So that's the advantage they have. They can even use your savings as part of the collateral. Instead of only using the motorbike, I could over time have already repaid my loan for the motorbike. I then become a choice customer. I can then keep on borrowing. So it's a sticky product. The strategy is not like a one-off product. It's actually a sticky product. And we are working with guys like What to Credit anyway to be able to build such products for them. Yeah. Our plan is just to build a bank for MSMEs. And we project that in the next 5 years, we should be able to at least uplift or grow with around 200 businesses who are MSMEs. We already onboarded some. We already have introduced a lot of products to them. We planning to keep on just growing that portfolio. In terms of profitability, we are already profitable. Last year we made around 40 million in terms of profit. This year we expect to grow 20-30% higher than that because we're introducing new products within our ecosystem. In terms of shareholding, we have a plan of also getting new investors on board. These are strategic investors who can be able to assist us in terms of either acquisition of customers or technology or liquidity. So must be strategic. You're coming on board and you have really an advantage that we want just to assist the bank with, either experience, liquidity, technology, or customer acquisition or partnerships. For commercial bank is 1 billion, 1 billion to 10 billion, right? Microfinance banks, not yet. But that doesn't mean that you have to stay around the minimum statutory requirement. A lot of microfinance banks in Kenya are already above the minimum requirement, and Choice is one of them. So we have the regulatory requirement, but we ensure that we have a big buffer, and because that really translates into business. So that liquidity core capital translates into a lot of things within the bank. It translates into the maximum ticket size you can give. It translates to how many deposits you can hold. It translates to how big business you can do in terms of forex, right? So that's we keep on building that. Yeah. And that's why I mentioned that we are looking to get on investors with time. We are looking at partners, by the way, not guys who are coming in to acquire the business. We are looking at guys who are seeing value in what we are doing, and they want to support and be part of what we are doing. Yeah, so that's what we are looking for now. So Bonface is a very simple guy, very simple guy. So my background is in statistics from the University of Nairobi. I'm also a CPA, although I've never been an accountant in my life, but I understand numbers because of that. I've also a background in investment, so I've done a lot of investment, specifically in the fintech space. That's probably how I got myself into Choice. Yeah. So Bonface is a family man with 2 kids, a boy and a girl. What else? Bonface is also a Seventh-day Adventist. He goes to church on Saturday. I'm a footballer, by the way. I'm a number 10. So I either 11 or 10. I try as much as possible to score. I also recently started playing golf. It's quite addictive, an interesting game. Yeah, that's all about Bonface. Yeah.
How often do you play football?
Every week, every Sunday.
Or do you have like
we have a small, it's called it's a cornerstone football team. So it's actually most of the members are from an SDA church. So they play on Sunday mornings from 7 to around 12. Yeah. So every day.
Sorry. Mm-hmm. Is this something you do for fun or just to declare to you?
It's for fitness and for fun. Yeah, it's for fitness and for fun. I lead actually that team. I lead I'm the let's say a captain of that team. So there's a lot of things that happen in that space. There's a lot of mentorship also. We have young guys. We play even with guys from high school, and they are very talented, by the way. They are very talented. They always shine on us. Yeah, but that is the kind of culture that we want to create. So we play with the pastors, with church elders in the same team. So it's one would be a lot of fitness and the fun that comes with it, but also the interactions. That's why you actually probably have real interactions with other church members, because in church it's a bit tight. Let's finish the sermon and then everybody disperses. But in the field you could talk, you could play around, you could get angry at each other, and that really creates bonds. Yeah. No, I didn't join actually for business deals. Totally. I've not even done probably 5 deals out of the golf course so far. Yeah, So that's not the main reason. I think the main reason was golf is a game of self-belief and decision making. So you have to have your own inner feeling on if you hit this ball, that is the direction. And if you listen to a lot of guys telling you, no, maybe you need to adjust your swing, you need to adjust how your position, your stance, sometimes you get it wrong. Yeah, so it's quite interesting on just learning on how to trust yourself, how to believe in your inner feeling. Even among the noise, a lot of guys make noise. You have to really trust on what you're doing, and believe in what you and focus on what you want to achieve. So that's number one. So it's a mental game. It's a very calm game. It's also a very unforgiving game. So you make one wrong stroke or shot, then you probably end up losing another 3-5 shots to get out of the forest or the rough, right? Yeah. So those are some of the things that you learn when you're playing golf. But also it's also a fitness game. It's a lot of walking. You do an 18 course, probably go up to 8. I think is a family. Family is key, and is very, very important. And I think if you have the right support from family, you're definitely in the right state of mind. Definitely, then you can be able to deliver on what you want to achieve when it comes to business. So that's what I've realized. So that means I have to intentionally create time for my family, for my kids, to ensure that then I'm there. I play with them. I have time to train them in terms of what they're doing. So that's quite important. And even I think from the older CEOs that I interact with, that's the same message they echo, that family is really very important, and you need really to ensure that you take care of it. I'll probably spend time in outside choice. I'll spend a lot of time in investment still. I have a lot of interest in investment, a lot of experience also in investment. So investing in the right businesses, investing in the right startups. So interacting with the new products, checking the potential of a product within the space, giving advice on what can be changed to ensure that the product can be able to fit into the market. Yeah, so that's probably what I'll do outside choice. Yeah.